Hello viewers, welcome to Fungo Finance videos where we talk about all things finance. My name is Dorcas and today we will discuss the topic of when it is a good time to buy the new IPO stock. The reason I felt this would be a good discussion is because people have been asking whether it's a good time or the right time to buy the Kenya Pipeline Company IPO that is being sold at the rate that is being offered at the rate of 9 shillings per share. The offer currently runs from January 19th to February 19th. Then the trading will begin from March 9th on the Nairobi Securities Exchange. I'm sure this video will be helpful and insightful, and I hope you get to be empowered to make a more informed decision on whether to buy the Kenya Pipeline Company IPO shares or any other IPO shares that will be listed in the near future. Now let's begin. One of the ways to explain a complex finance topic is to use examples of everyday situations or events that we know about. So today I'm going to use the analogy of a simple fruit stand and try to demystify what IPOs are really about. Investing in the new initial public offering can feel like walking into a bustling fruit market where a mysterious new variety of fruit is being launched for the very first time. There's excitement in the air, there are farmers getting involved, there are brokers getting involved, and then you have customers who are seeing the fruit for the very first time. There's also the element of uncertainty, and this raises questions of one, for example, is this new fruit worth the hype? What are the health benefits? What are the how does this taste like? How does this look like? Or is it secretly a bargain waiting to be discovered? For the everyday person, the world of IPOs can seem complex and intimidating, but the truth is, it's not as complicated as it looks. It's a lot less intimidating than it looks because the information is out there. Let me start by simplifying what the Kenya Pipeline Company IPO is all about. The offer price is 9 shillings per share. The lead transaction advisor is FIDA Investment Bank, and the lead sponsoring broker is Bla Investment Bank, while the co-sponsoring broker is Francis Drummond and Company Limited. The authorized selling agents are the stockbrokers that you probably have a CDS account with, like SBG Securities, Tuntra Investment Bank, and the others. Let's imagine you're in a busy fruit market. You find a fruit that is selling, you find a company that is selling a unique fruit, maybe it's called dragon fruit, that is maybe color purple. Then they're selling this dragon fruit at 9 shillings per piece of fruit. Then the offer price, the company that is selling this dragon fruit is selling from 19th of January to 19th of February 2026. The first market day, you get in and then you're given a sample of the purple dragon fruit, and you're not used to the taste before, but it's interesting. So when you show interest, that's when now you go to the farmer or you go to the company that is made that is selling the dragon fruit, and you say, okay, I'm going to buy half a slice. I'm going to buy half a fruit of dragon fruit at maybe 900 shillings, or I'm going to buy a full dragon fruit at maybe 1,800 shillings. So again, using the fruit analogy, the lead transaction advisor can be compared to the lead farm inspector. These are the people who inspect the farm that the company runs, and they're the experts who check the health of the fruit, and they help determine the 9 shillings per fruit price. The lead sponsoring broker, these are the people who provide the infrastructure for the farmers, for the company now to be able to display the fruits in front of prospective customers. The main vendor would, like, for example, think of supermarkets like Nakuma, Ukumi, and the others. So it's basically giving you a platform to actually list the price of the fruit. The co-sponsoring broker can be compared to the assistant stall attendant who is helping you to sell the fruit at 9 shillings per fruit. And the authorized agent can be compared to fruit sellers, different farmers who went to the company to buy different fruits and to be able to sell to you. They are basically brokers, and they are licensed brokers, by the way. So, for example, they are licensed to sell the fruit to you on behalf of the company, and they have the online platform or the mobile app where you can order the fruit. So I hope that explains how IPOs actually are. Before we talk about the seven sides of our hidden bargain IPO, let's have two scenarios at the back of our mind. You could be in the market and you've seen this purple dragon fruit for the very first time. You decide, okay, I'm going to buy 100 dragon fruit. I keep it at home. Well, I wait for some time, and then I'll be able to sell them when the market really wants them. Maybe during months of very follow rainfall. Or I could be in the market and also buy the seedling of this hybrid dragon fruit, so that now I plant in my farm somewhere. Both scenarios still apply. So when we're looking at the signs, the IPO, again, we have to look at seven things. If there is presence of a strong demand for sales, you will find in the market that the stall is really, really crowded. When you see a long line of people trying to get a ticket to buy the fruit before the stall even opens, there's a high chance that the market is taking the new product positively. In the market, when an IPO is heavily subscribed, it means that investors want more shares than the ones that are available. It signals a strong belief in the company's value. It's the market's way of saying this price might be too low for the appetite that exists. In simple terms, if everyone is clamoring for a piece of the dragon fruit or is clamoring to buy the seedlings of the purple dragon fruit, maybe the stall owner underestimated the crowd. The second thing to look at is the price. When people talk about a low price to earnings ratio as the criteria for buying an IPO share, what they mean in simple language is the price of, say, a slice of dragon fruit. The sign is, if you're at the market, you're getting a really large, juicy slice of dragon fruit for the price of a small one. In the market, the price earnings ratio compares the stock price to the company's earnings per share. A relatively low price earnings ratio, especially when compared to established peers in the industry, within the country or outside the country, it suggests that you aren't overpaying for each shilling of profit the company makes. For a new company, it's a sign of a conservative, possibly undervalued starting price. For example, when you compare the price of dragon fruit being sold in Kenya for the first time and the price of dragon fruit that is being sold in Tanzania, and you see the comparable price, you see that in Tanzania it's being sold a bit higher, then definitely the price you're getting here in Kenya it's a bargain. The third thing to look at is to compare with other similar sized fruits in the market. For example, when you find that this dragon fruit that is being sold at 9 shillings per dragon fruit is similar in appearance and size to our watermelon. Then, and you know that the watermelon is being sold at maybe 50 shillings per watermelon. Then you're able to gauge in your mind that there's a possibility that the dragon fruit should have been sold at 50 shillings and not the 9 shillings that is being offered. So in finance terms, we say this is comparison shopping. We analyze similar public companies in the same industry. If the IPO's valuation or its total price tag is significantly lower than its competitors for a similar size and growth rate, it may be undervalued. Ask yourself, what are they charging for watermelons at the other end of the market? In simple terms, think of it as if it looks, smells, and tastes like a 50 shilling watermelon, a slice of watermelon, but it's priced at 9 shillings, then we may have found a great deal. The first factor to look at is strong growth prospects. From a farming perspective, farmers will always buy the seedlings that shows great potential. If you're a farmer in the market and you come across a vendor that is selling a dragon fruit seed at a really good bargain, then you're not just buying a piece of dragon fruit. You're being offered a stake in a young, healthy tree in the future that, if planted in a fertile soil and has fast-growing root system, will give you yield of maybe hundreds or thousands of dragon fruit trees. In finance, we say that an undervalued IPO often has a clear, scalable path to growth, its sales and profits. We tend to look for companies in expanding industries, for instance, organic farming technology, as compared to investing in a stagnant market. And we plan to capture more space in terms of growth, valuations, and possible profits. Future growth can justify a higher price later. The way we see, for example, Amazon in the early 2000s and the price of Amazon today, there's a clear growth. So when you think of it simply, you see yourself buying a packet of seedlings that, if you plant in maybe your 1 acre property, you're likely to get maybe yield of maybe 50 or 100 or even 200 times what you have planted. So the idea is to buy at a really good bargain in order to profit from it maybe 10, 20, 50 years from now. The fifth factor to look at is the positive company narrative. This means that if, for example, you're at the market and the farmers or the company made up of farmers, they don't just have dragon fruit, they have a unique story. I mean, they have a story about a unique drought resistant dragon fruit that schools want to buy for every cafeteria in the country. And they've established through research that the dragon fruit helps with student performance, with concentration in class, and it is equivalent to the medicinal antibiotics that children take for common cold and flu. And that would be a compelling narrative for you as an investor to buy the fruit or the dragon fruit seed. In finance, we say that a believable and exciting narrative, whether it's solving a big problem, having a patented technology, or being led by a trusted founder, it builds investor confidence. If the story is strong and compelling, but the initial price doesn't seem to fully reflect that potential, it could be undervalued. Therefore, in simple terms, a great story can turn a simple dragon fruit product into the next superstar fruit, but make sure that the story is rooted in reality. Another factor you should think about is high quality investor backing. In other words, from a dragon fruit perspective, then it would also be equivalent to the expert gardener's interest. The sign of that will be the most successful seasoned farmers are buying in the market, and they're also queuing in line waiting to make really big orders for this new dragon fruit. In finance, when we find respected institutional investors like mutual funds, pension funds, or well-known venture capitalists take a large long-term position in the IPO, then it's a strong endorsement for the IPO price and the company. These quote unquote expert gardeners do deep research. They have information that may not be available to the public, and therefore, when they take a large position and buy the dragon fruit, it's a signal that they see underlying value. So, in simple terms, when we think about it, follow follow what these big buyers are doing. If these big successful farmers are buying dragon fruit in large amounts, then there's a high chance that they value over and above what we are anticipating it to be. And I think we should also consider taking a position. The last sign that the IPO stock is a strong again is there is strong positive market sentiment. In equivalent terms, we mean that there is a sunny focus, meaning that the environment, the weather, the climate, and the infrastructure is conducive for planting dragon fruit for harvest, for export, or for domestic consumption. So the new dragon fruit is launched on a bright, calm Sunday or Saturday morning, not during a hurricane. That is a good sign that the dragon fruit will be received with positive reaction. In finance, we say that the overall market conditions matter. A fantastic company can launch at a fair price, but if the entire stock market is in a fearful storm, let's say a recession or, or in a pandemic like the one that we had during COVID, then its price may be suppressed unfairly. Conversely, or alternatively, a positive industry trend like a health craze for dragon fruit can lift all boats, but your IPO might still be the most reasonably priced boat in the harbor. Therefore, in simple language, a good dragon fruit can sell in any weather, but if fair weather helps reveal its true color, then it will be received favorably, and the reaction will be positive. Now, let us summarize what we have discussed so far. Using what I call quote unquote SOPA's checklist, before you decide to invest, walk through this list. Read the fruit pamphlet, or in finance terms, the company prospectus. This is the most important tool. It is the company's official description of its business, risk, financials, and plans. The second one is to shop the aisle or do comparisons. Find two or three publicly traded companies that are similar to the one that you're buying. Compare the valuations, for example, price earnings or dividend yield or whatever other valuation metrics that you use. The third thing is to inspect the price tag, or in finance terms, we call them key ratios. Look at the price earnings, but also understand other basics like debt levels, or which means when we talk about debt levels, we mean are they carrying too many rotten fruits in the basket? The first the first checklist to look at is to gauge the buzz and the story. In finance, we try to evaluate whether the demand is logical based on the company's fundamentals, or if it's just a hype that will either lead to a bubble that will eventually burst, or it's reasonable. With the narrative compelling and believable. The fifth checklist to look at is to see who is in line, or in finance terms, look at the investor quality. Research which major institutions and large scale investors are investing. It's a key signal of confidence in the company's IPO. The last one to look at is to look at the climate. Or in farming terms, you look at the sky, you look at the weather to see how it is. In finance, we encourage people to consider the broader market and sector trends. What is the future of farming fruit in the country, or in the province or county where you are? Then you make your decision. Is it a supportive environment, or is it a new environment that needs to be evaluated further? Then you make your decision. Now that we have come to the end of this video, we've identified 5 tips that you can look to help you evaluate whether you can buy the Kenya Pipeline IPO offer. If you will take it at 9 shillings, or you will wait for it to either maybe increase to 15 shillings, or reduce to maybe 5 shillings per share. With this criteria, I'm sure you'll be better informed on how to look at, how to examine the 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 valuations of that company, or any other company that will have an IPO in the Nairobi Securities Exchange. The idea is spotting an undervalued IPO is part art and part science, and it requires a good deal of common sense, much like picking the best fruit at the market. By looking for the 7 signs, which are strong demand, a reasonable price rise, favorable comparison, growth potential, good story, a smart investor interest, and a sunny market focus, you're able to equip yourself to make more informed decisions. Remember that even with the best analysis, investing in IPOs carries the risk of biting into a fruit that isn't quite ripe, or is far less sweet than promised. Never bet your entire Oxford or your entire investment or savings on one new seedling. But with this fruit, quote unquote, fruit stand framework, you can browse the market of new offerings with a sharper, more discerning eye, searching for the rare seedlings that are priced for today but have the room to grow into something magnificent tomorrow. For now, happy and wise investing. At the Also, we've come to the end of this video. I'm sure you've learned something. Please do not forget to like and subscribe to this channel, and let us know in the comments if you're going to buy the Kenya Pipeline shares or not. Let us know what you think, and until next time, goodbye.